Hey, Crypto Hotep here with another investing video. This video, we are going on to week number 11. We're moving right along here. Week number 11 for the family portfolio. If you're unfamiliar with the family portfolio, before we begin, please look at week number 1, where I go over my methodology, my steps, the reason why I'm doing this. And, long story short, I want to record these videos as I'm taking my family on this investment journey, all of us together. And I want to make these weekly videos just to show the progress, maybe just to show kind of the hard times in investing, when you see nothing but red days. And then also the importance of having dividends within your portfolio as well. So I made a short list of stocks for my family to choose from. They chose what they wanted, and we used M1 Finance as the broker. Now, with M1 Finance, unlike other brokers, you're able to have kind of sub portfolios or pies within your larger pie. So you will see shortly we have a family portfolio, and then within the family, we have a pie for dad stocks, i.e., me, mom stocks, i.e., my wife, and then our children's stocks that you will see. So, before I begin, one more PSA. Nothing I say is financial advice. Please consult a professional before you trade or invest in any type of stocks or volatile assets. And with that being said, we can jump right in here. So, week number 11. Before we go into the start of the new week, we also have to look back to see where we were at. So, last week, we were actually pretty good. We were up over almost 10% weighted rate of return year to date, and then our balance was 657.02. Now let's take a look at this week. So this week we are 658.70. Okay, so the balance just ticked up a little bit, and we have a weighted return of 6%. Now, a couple of things I did notice with the M1 Finance platform that I do like is a couple things. The year to date is now highlighted here, okay, which is good. So you can see that very easily. And then when you get new dividends, there's a little tab or a little marker here that says new. So we did get some dividends here, and we're going to check those out. And this is pretty nice. This is pretty good. So year to date, and I'm just seeing this for the first time here. So year to date earned dividends for the family portfolio, a total of $3.21. And now it broke it down into the pies. I wonder if, just me thinking out loud here, I wonder if everyone finance actually heard my previous video, because I believe I suggested this on one of my prior videos. It'd be great to see where these dividends were allocated from. So what's nice is you can see our oldest got dividends here, and it'd be nice if we could see those dividends, but we can't click into that. That's fine. Our youngest has also 2 cents in dividends, our middle 2 cents, and then I do have the bulk of it at $2.27. That's a pretty good update. Um, so and we'll look back on the activity history of the family portfolio. We did have a couple of buys here. And on that dividend note that we had between this week and last week, we did have some dividend action with Caterpillar. Now, that's in my portfolio. We did get a 4-cent dividend in Caterpillar. Let's check out the buys that we did make. Okay, so again, Nintendo. Nintendo's a fan favorite with our middle and our youngest. Pepsi, wife loves Pepsi, so bought some Pepsi, bought some Apple, can never have too much of Apple. McDonald's, same thing. Costco and Amazon, some solid buys here. Okay, and let's head over to the portfolio. Okay, so we always like to go bottom to the top, so we'll check out our youngest. Now, our youngest portfolio, not bad. We are up over 1%. Okay, he actually got dividends, and let me see. Maybe now I can see where the dividends from. Okay, great. So here it didn't show before on the front page of the portfolio, but when you go into the pies, you can obviously see those dividends right here. So we have dividends for Apple that our youngest received, which is nice. And we have Apple up over 7% for our youngest portfolios. Tesla up over 1.5%. Nintendo's still down, but it's closing that gap down over 3%. I believe it was down, I think, over 4 or 5% last week. So closing the gap with Nintendo. Other than that, not too many changes there. Okay, let's go to my wife's stocks here. So as we know, my wife has been carrying the load, I should say, with our portfolio. As you can see, ridiculous weighted rate of return at 22%. And everything's in the green. My wife just she struck a gold mine with Celsius, and we just keep buying Celsius for her in this portfolio, up over 32% year to date. Ridiculous. Pepsi up over 8%. Fantastic. And then Google. We got my wife some Google at a fantastic price and up over 22%. Only 3 stocks here, and her weighted rate of return dwarfs anything else in our family portfolio, even mine. Okay. Our oldest, we keep it simple with 2 stocks, 1 and 2. Apple, McDonald's, similar to our youngest who had Apple, up over 9.5% for Apple. McDonald's, still trying to find price discovery here with McDonald's. They are dipping low, completely fine in my book. Our oldest can handle the volatility. McDonald's is not going anywhere. They just introduced a $5 meal to help curb with inflation and the high ticket items when going out to eat. So, I think that will hopefully generate a little bit more revenue, bring some more people out to the fast food chain, and all in all, be good for the business. Our oldest weighted rate of return, little down at a little bit over 1.5%, but our oldest does have dividends as well. Both of them, McDonald's and Apple, right there. Okay. And then our middle. So our middle up over 3%. Wow, that's even. 3% even here. Our middle also has dividends. First dividend with Costco. Very nice. Very nice. And we can see here again, Nintendo, just like with our youngest, Nintendo's down over 3.25%. But again, closing that gap with Nintendo. Costco, you can't stop the wave with Costco. Costco, I believe, let's click into this. I believe it's at 800, or it was at 800. I believe it cracked 800 today. I think I got a notification that it did crack 800 today. And so, people are writing off Costco, as I said, but Costco still pushes along here. And then Amazon up over 1.5% here. And then last but not least, we will look at mine. So mine, dad stocks only up about 1.5% here. We can see my dividends earned. We can click in those as well and see those. And then with mine, I have pies within my pie because I've allocated my stocks to different sections related to pharmaceutical, real estate. What's nice is I'm getting dividends from all of those sectors, if you will. So year-to-date dividends, $3.11 here. Decent enough, though, in terms of the performance of my sectors here. Industrials and energy continue to be one of the big players here. Technology has gone up tremendously. More than likely, that's because of NVIDIA. I would assume NVIDIA up over 14%, Google up over 31%, and Apple, you can never bet against Apple, up over 13%, carrying the load here. Okay. AMD continuously dropping here, down over 24, almost 25% for AMD. Still bullish on AI. Still, if I'm bullish on NVIDIA, I think it's only right to be bullish on AMD as well. So I will not be relinquishing my AMD shares anytime soon. And we will continue to buy. Let's see here. The consumer staples dip a little bit below 1% here, but again, it's not huge. The consumer staples are kind of consistent with how with the type of returns that they do have. So nothing too exciting there. Finance is up. We have Amex, Aflac, and Moody's Corp, both all in the green here. Fantastic. Visa a little down. Not really worried about Visa. Visa will always find its footing. And I think the last we'll look at here are restaurants. So restaurants, majority, more than half in the green. And I believe these were the same ones that were in the green last week too, with the prime suspects that are in the red being McDonald's and obviously Starbucks. But Hershey's, Texas Roadhouse, the GOAT, as always, Coca-Cola, and Domino's Pizza. Domino's Pizza up over 12% and on an absolute tear. It's a good segue into the stock that we are looking at this week, which is Domino's. As we all know, Domino's Pizza is a pizza chain. They sell pizzas. They've actually really invested into AI with their technology and software and how you order pizzas and how you get suggestions for pizzas and those type of things. So it's often said that Domino's Pizza is also somewhat of a software company as well. Analysis consensus is a buy with a 505 target for Domino's Pizza. They're at 502.13 currently. Okay, and let's look at revenue here. So with the revenue growth, little down from last year. So in the negative on the revenue growth here. So that's that's obviously something you do not want to see. You don't want to see revenue growth going in reverse here. Okay, so just keeping my eye on that and looking forward to this year, as this year actually proved or has proved to be beneficial in Domino's Pizzas on the revenue side, I should say. If we go to the balance sheet and cash equivalents and cash growth, I should say, has gone up in 2023 from being negative in 2021, 2020, and 2019. So that's good to see. Let's see. Total debt, we are in the negative for total debt for the past 2 years, which is also good. The retained earnings, unfortunately, are in the negative. I usually like to see a positive retained earnings, but again, you're dealing with food, restaurant, fast food type style industries. So very common to see, that negative. Let's go to cash flow. No, operating cash flow growth, positive, rebounded from 2022 from being negative and bringing that back into positive. And net cash flow also with free cash flow also in the positive here. Okay. So the only thing really on my side that I would want to look out for with Domino's Pizza going into next year, after this year closes, is that revenue. I want to see some sort of revenue growth with Domino's Pizza. We look at growth years for Domino's Pizza in terms of dividend. You got 13. The payout ratio is only 39%, so below my threshold of about between 60 and 70%. Dividend growth, besides it having a kind of a weak 1.2% dividend yield, the dividend growth is double digits, over 17.5%. Okay. And we can see on the dividends itself from the 10-year chart, just a consistent rise in those dividends for Domino's Pizza. And with that, we will go to the charts for Domino's Pizza. So charts here, as you know, we like to go through on the weekly chart here just to draw up some key levels. And we like to look at the weekly for those key levels. So here, I would consider this a key level here. I like that level. This one. This one. This one. This one. And as of right now, that could probably be about it. Then we switch to the daily, and we'll see where price is currently and see if we can draw out some buying areas. Okay, so what we look for is we look for price to interact with those weekly or to react strongly to those weekly levels and to produce some sort of reaction so we can mark that area as a buying or a selling area, and that's where we would want to get in. Okay, so currently price is sitting, it looks like at about 507 currently on this weekly level here. We wouldn't blindly buy into Domino's Pizza here unless you're like DCAing into it, which is what we do. But on a trading level or a prime investment level, what I would look for is I would look for buyers to get into this 507 level where we would want price to do something like this. So you have some bullish pressure coming up, which is rejecting price from that 507 upward. And then you would want price to come back down, retest, to then potentially make a new all-time high for Domino's Pizza. Now, do I have a crystal ball? Do I know when that's going to happen? No, but this is my process and how I trade, and a good way to invest, because you want to be in an area where other bigger buyers find value in that area to buy the stock. So with that being said, guys, other than that, there's not a lot of areas here that I see. This could be used as a flip zone, though, what I like to call. So right here, this area here, this could be used as a flip zone. So what a flip zone is, or what I consider a flip zone, is a failed selling or buying area. And what I mean is this area would be considered, this would be a legitimate, a legitimate selling area right here. This would be a selling area. Why? Well, this selling area caused a change of character here, right here, where price stopped bullish movement and then broke to the downside. And this was the low that was taken, which caused a change of character. But with that being said, you would expect price to reject this area and then come down. It didn't do that. What price did was bullish pressure came up, and my assumption is this was earnings, which it was. So Domino's projected great earnings. So now we have bullish pressure just slicing through that daily selling area as if it wasn't even there. So now we can suspect that this area would flip, similar to the concept of support becoming resistance or resistance becoming support. I look at these zones or these areas as flipped areas now, where now I'm still not gonna blindly buy into this. I want to see that bullish pressure in this area, and when I see that bullish pressure, then I can buy in when price comes back down into this area. But until I see that, I'm not doing anything. But with that being said, we will cut this video, and thank you again, guys. And as always, happy investing.